Hello everyone, and thank you for joining today's True Trading webinar. I am excited to be here with you. My name is Mohammed Azim from Traders United. This disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the main topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the unemployment rate Australia. And I'm going to discuss the AUD USD currency pair. Next, we have the retail sales month over month related to USA. And I will be discussing the Euro USD currency pair. Let us start with the first financial news, the unemployment rate in Australia. Now, what is the unemployment rate? The unemployment rate measures the percentage of Australia's labor force that is unemployed but actively seeking work. It is one of the most important indicators of labor market health and a key gauge for the Reserve Bank of Australia when setting monetary policy. A falling unemployment rate generally signals strong economic activity, which can encourage the RBA to maintain or tighten policy, typically supporting the Australian dollar. Conversely, a rising rate may point to weaker conditions, potentially prompting rate cuts and putting downward pressure on the AUD. Now, on August 14th, 2025, we got the July unemployment report. So the previous number was 4.3%, the forecast was 4.2%, and the actual data we got is 4.2%. Now, the market reaction we got is the unemployment rate came in exactly as expected at 4.2%, confirming steady labor market conditions. Despite meeting forecasts, AUD/USD fell in the aftermath of the release. This suggests that traders may have positioned for a stronger surprise. Let me show you the chart of AUD/USD currency pair as well. So this is the chart of AUD/USD currency pair. And on 14th, that's the date, that's the drop right over here. So AUD/USD currency pair fell in the aftermath of the news data release. This suggests that traders may have positioned for a stronger surprise, a drop below 4.2% or shifted focus to other factors such as participation rates, wage growth, and global risk sentiment. Now, the interpretation is the muted, the on-target result usually provide some sort of a muted reaction because the forecast was 4.2 and the actual number we got is also 4.2, but in this case we got the drop inside AUD USD currency pair. So the data neither signaled significant improvement nor deterioration, pointing to stability in the labor market. With unemployment rate holding steady, the Reserve Bank of Australia (RBA) may have limited incentive to shift its stance immediately through uh, now the inflation and external conditions remain crucial drivers. The AUD USD currency pair drop shows the negative price action, and this negative price action indicates markets were either or underwhelmed by the lack of upside surprise or reacting to broader US dollar strength and risk aversion. The overall outlook we got is this release comes at a sensitive point for Australia, with global growth concerns, commodity price fluctuations, and domestic inflation pressures shaping expectations. While the unemployment figure meet forecast, the AUD reaction or the Australian dollar reaction underscores how markets often demand stronger signals to sustain bullish momentum. For now, AUD/USD is likely to remain influenced by global sentiment and US data, but traders should remain alert to any further shifts in Australia's labour market that could alter Reserve Bank of Australia expectations. The next financial news is the retail sales M over M. M over M means month over month. And we got this data on August 15th. This is the 12:30 p.m. UTC time. Now, what is retail sales M over M? Let me explain it. The retail sales month over month measures the percentage change in the total value of retail goods sold in the United States compared to the previous month. It is a leading indicator of consumer spending, which makes up roughly two-thirds of US GDP. Because household consumption is a primary driver of economic growth. The report is closely monitored by traders, economists, and policymakers, including the Federal Reserve. A stronger reading usually supports the US dollar, while a weaker figure tends to weigh on it. Now, on August 15, 2025, the retail sales report, meaning the July data that we got in the month of August, is the previous number was 0.9%, forecast is 0.6%, the actual data we got is 0.5%. Now, the market reaction we got is the retail sales came in slightly below expectations at 0.5%. The forecast was 0.6%. Okay, so the zero point 0.5 is a less number as compared to the 0.6%, making a slowdown from June's strong 0.9% growth. Despite still showing positive consumer activity, the softer print reinforced concerns that high borrowing costs and sticky inflation are beginning to cool demand. Following the release, the Euro USD actually tried to move higher. Let me show you the chart of Euro dollar. So over here, you see Euro USD actually rallied up. Okay. Here is the chart of Euro dollar currency pair. And following the release, the Euro USD moved higher. If you check out the August 15th, this is the August 15 right over here, and we got the bullish price action overall after the news release. So following the release, the Euro USD moved higher, reflecting mild US dollar weakness as traders scaled back expectation of more aggressive Fed tightening. Now the interpretation is weaker than forecast print suggests consumer momentum is slowing, even if demand remain resilient overall. Now, the Fed implications is the result does not signal an immediate downturn, but it reduces the urgency for additional rate hikes. Instead, it supports a more cautious policy stance. The disappointment weighted on the USD, helping Euro USD extend gains after the release. So the overall analysis is the July retail sales reported highlights that US consumer remain active but at a slower pace than markets expected. While the figure is not outright weak, the undershoot added to concerns about the economy's ability to sustain strong growth under tight monetary policy. For Euro USD, the upside move reflects shifting expectations that the Fed may stay on hold for longer, while traders remain attentive to upcoming USA inflation and labor data for further direction. Next, let us take a look at previous week global market trends, the euro dollar and the US dollar Swiss franc. So first one is the euro dollar. The way I see euro dollar just keep going up over here, and market is probably going to rise up from current price level. So the way I see, expect more upside in euro USD currency pair. Now, if you check out the US dollar Swiss franc, US dollar Swiss franc is probably going to move sideways, and market is probably going to show us further weakness in price action over here. Okay. Next, let us take a look at current week macroeconomic events and data releases. So let's do the fundamental analysis. The number one is the official cash rate, OCR, related to New Zealand, and I'm going to discuss NZD USD currency pair. So the date and time is August 20th at 2 a.m. UTC time. Next, we have the German flash manufacturing PMI related to euro, and the currency pair we're going to discuss is the euro USD, and date is August 21st. The time is 7:30 a.m. UTC time. Now, let me start with the point one, or the number one news, the official cash rate, OCR. So what is the official cash rate, also known as OCR? The official cash rate, or OCR, is the benchmark interest rate set by Reserve Bank of New Zealand, RBNZ. It directly influences short-term borrowing costs, lending rates, and overall financial conditions. The OCR in the RBNZ's tool for maintaining price stability and guiding economic activity. Now, raising the OCR meaning tighter conditions to cool inflation. Cutting the OCR means cheap borrowing to stimulate spending and economic growth. Now, on August 20th, 2025, um, we are going to get the number. The previous number was 3.25%, and the forecast is 3%. The actual data not released yet. So the market expects the Reserve Bank of New Zealand to deliver a 25 basis point cut, lowering the OCR from 3.5% to 3%. This move would reflect easing inflation pressures and signs of weaker domestic demand. However, if the Reserve Bank of New Zealand chooses to hold steady instead, it could signal concern about persistent inflation or financial stability risks. Now, the possible market impact on NZD USD is, if the OCR is lower than expected, meaning less than 3%, then it means a deeper cut would surprise Forex markets, signaling stronger concerns about slowing economic growth. Likely outcome would be NZD USD weakens sharply, with NZD USD falling as traders price in a more dovish policy path. If the OCR matches expectations, the 3%, which confirms the expected easing economic cycle, and the market reaction may be modest unless the Reserve Bank of New Zealand statement hints at further aggressive cuts or a prolonged pause. Now, the impact that we are probably going to get on the NZD USD is the impact will depend heavily on the tone. Okay, let me show you the chart of NZD USD currency pair. This is the chart of NZD USD. Now, the dovish tone means if the NZD USD gets a bearish tone from the Reserve Bank of New Zealand, expect a limited limited downside. Okay. Now, if the OCR is higher than expected, greater than 3%, a hold at 3.25% or a surprise hike would defy market senses. So it's going to defy market consensus. This would suggest that the Reserve Bank of New Zealand remains concerned about sticky inflation. And the likely outcome would be the New Zealand dollar is going to strengthen, lifting the NZD USD as rate differentials shift in favor of the Kiwi. So the overall analysis is the August 20th OCR decision will be pivotal for shaping expectations around the Reserve Banks of New Zealand's policy path in late 2025. So the Forex markets are bracing for a rate cut, but the forward guidance in the policy statement will be just as important as the rate move itself. The Forex traders will scrutinize the Reserve Bank of New Zealand's commentary on inflation trajectory and price stability, domestic growth risks amid weaker demand, global conditions, and their impact on the Kiwi economy. So the key takeaways for the NZD USD is lower than expected OCR, meaning less than 3%. That's the bearish for New Zealand dollar, and expect a drop in price action for NZD USD currency pair. Now, if the OCR gets 3% and it matches the forecast, then expect a neutral or modest move. And it also depends upon the tone of the Reserve Bank of New Zealand. A higher than expected OCR, meaning if we get a greater than 3% number, that would be the bullish case for the New Zealand dollar, and expect a bullish price action in NZD USD currency pair. So the conclusion is, with a rate cut of 3%, widely expected, the real market driver will be the Reserve Bank of New Zealand's tone on inflation and growth risks. A dovish statement could reinforce Kiwi weakness, while a cautious or hawkish stance might cushion downside in NZD USD. As always, traders should remain mindful of global risk sentiment and the Federal Reserve's parallel policy trajectory, which together set the broader tone for NZD USD flows. The next news item is the German flash manufacturing PMI related to Eurozone, and I'm going to discuss the Euro USD currency pair. So we will get this report on August 21st at 7:30 a.m. UTC time. Now, what is the German flash manufacturing PMI? PMI stands for Purchasing Managers Index. The German Flash Manufacturing Purchasing Managers Index, or PMI, is a leading indicator of the health of Germany's manufacturing sector. The backbone of the Eurozone economy is the German economy. Okay, so compiled from monthly surveys of purchasing managers, it tracks output, new orders, employment, supply delivery times, and inventories. A reading above 50 signals expansion, while a reading below 50 points to contraction. Given Germany's outsized role in the Eurozone, this release carries significant weight for both regional and global markets. Now, the previous number we got was 48.4%. The forecast is 48.8, and the actual data not yet released. Now the preview and expectations. Market expects a modest uptick in the German flash manufacturing PMI, rising from 48.4 to 48.8, while the reading is still below the 50 threshold, signaling ongoing contraction. The improvement could suggest that conditions are stabilizing after a prolonged period of weakness. However, demand remains soft, cost pressures are persistent, and geopolitical uncertainties continue to weigh on sentiment. Now, the potential market impact on euro dollar that we're going to get is that if the PMI is higher than expected, meaning greater than 48.8 number, then that's a stronger data, and this could ease fears of industrial stagnation. Let me show you the chart of euro dollar currency pair. So the May, the if we get a greater number, 48.8 number or greater than that number, so this may reduce bets on imminent ECB easing. And the likely outcome we're going to get is that the euro is going to strengthen, pushing the euro USD higher. If PMI matches expectations, 48.8%, this confirms the stabilization but not recovery, and market reaction may be muted. We might get some more sideways looking candlesticks over here. So forex traders may shift focus to other eurozone or USA financial news releases for direction. If PMI is lower than expected, meaning less than 48.8%, then we get a signal that there's a deeper strains going on in the German manufacturing, and this reinforces concerns about the eurozone economic growth. And the likely outcome would be the euro weakens, the euro USD is probably going to fall on dovish ECB expectations. So the overall analysis is, with the European Central Bank balancing inflation, concerns against signs of slowing growth, the August German flash manufacturing PMI will be a key gauge of momentum. So any deviation from expectations could reshape short-term sentiment on the euro, particularly if it alters the outlook for ECB policy. So the conclusion is, until the financial data is released, the euro USD may stay range bound, influenced by US dollar dynamics and broader risk sentiment. A stronger print could provide near-term support for the euro, while a weaker result would likely deepen concerns over eurozone stagnation and pressure euro USD lower. Okay, let me now talk about the current week global market trends. The number one is the euro dollar, then the NZD USD, and then the British pound and XAU USD, the spot gold. Let us start with the euro dollar. Okay, this is the chart of euro USD. Let's go to our monthly time frame. So the monthly chart actually looks bullish. The trend looks up over here, and it's quite possible that price action is probably going to rise up more over here. If you check out the weekly chart, same story. Price action just keep printing higher, swing highs and higher, swing lows. Now, if you go over to a daily time frame, the trend again looks bullish over here. We got some sideways price action over here. So the financial news items which I have discussed, you need to keep an eye on it. So the trend looks bullish in euro dollar currency pair. Okay. Next one is the New Zealand dollar versus United States dollar. Let's take a look at NZD USD currency pair. And this is the weekly time frame of NZD USD currency pair. If we go to the indicators, oscillators, apply the RSI, relative strength index indicator. I'm using a 14 period ATR, sorry, the RSI with levels of 30 and 70. So right now the weekly chart is showing neutral RSI. RSI is not hitting the upper level, the 70 threshold. So the way I see market has some more room and we might get further upside in NZD USD currency pair. Now, if we go over to the daily, again, you see the RSI is neutral. So it's quite possible that NZD USD currency pair is probably going to rise up more over here in daily time frame. Next, let us take a look at GBP USD currency pair. Okay, this is the British pound versus US dollar. So right now, price action is finding support over here and the weekly trend looks actually bullish. If we go over to the insert indicators, oscillators, apply the relative strength index indicator, the RSI. You see we got some overbought reading previously, and then we got a drop in price as well, but market managed to stay above this area, this support. Okay, so go over to a daily time frame. So we got this drop in price action right over here. That was kind of a pullback. Okay, so the way I see market is probably going to resume the uptrend over here in GBP USD currency pair. Next, let us take a look at XAUUSD, the spot gold. Spot gold trend looks clearly up. You can notice that price just keep printing higher highs and higher swing lows. For last few months, we got some sideways activity. Okay, but overall, you see it's a nice uptrend over here. If you check out the daily, market is trying to move sideways. So from these lows, expect further upside in spot gold. The XAUUSD pair is most likely going to rise up more. Okay, if you have any questions or comments, feel free to type inside the chat box and I will be happy to answer your questions. So let us review what we have learned today. I discussed about the official cash rate OCR related to New Zealand, and I covered the NZD USD currency pair. Then we also discussed about the German flash manufacturing PMI related to euro, and I discussed the euro dollar currency pair. And then we also look at different potential trade setups in euro USD, NZD USD, GBP USD, and spot gold. So these are the assets to watch out for profits. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. And if you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, August 26th, 2025 at 12 p.m. UTC time. So from my side, have a nice day and bye-bye.